NIO stock clawed back some of its recent losses on Thursday, closing the day at $6.51 per share. That was a gain of 17 cents, or about 2.7%, compared to Wednesday's close of $6.34. The stock traded as high as $6.55 intraday and as low as $6.26, before ending near the upper end of that range. At first glance, Thursday's move might seem modest, especially compared to the wild swings we've seen in recent sessions. But it's an important signal. After dropping more than 5% on Wednesday, a move that some investors feared might break the momentum from last week's breakout, NIO showed resilience. Buyers stepped back in, the stock defended its $6 floor, and the price rebounded. In other words, Thursday looked less like a reversal of fortune and more like confirmation that NIO is stabilizing above a key support level. So what was behind today's trade? Let's break it down. First, the most important factor is that this was a continuation of consolidation. Wednesday's drop wasn't just about NIO, it was about market psychology. After rallying nearly 40% in less than a week, the stock needed to cool off. That pullback was healthy, and Thursday's rebound proves it. By holding above $6 and bouncing back towards $6.50, NIO sent the message that investors are willing to defend the breakout. That's a crucial step for building the kind of base that can sustain a larger rally. Second, optimism around NIO's product lineup remains a strong undercurrent in the market. Even though there wasn't a brand new announcement on Thursday, investors are still processing the implications of the company's updated ES8 premium SUV and the Onvo L90 mass-market vehicle. The ES8, unveiled earlier this month, is one of the few three-row electric SUVs available in China, directly targeting Tesla's Model Y in the premium segment. Under NIO's Battery as a Service plan, it's priced around $43,000, making it an attractive option for families who want space, range, and technology. That keeps NIO firmly in the premium conversation. Meanwhile, the Onvo L90 is shaping up to be the company's potential blockbuster. Analysts are projecting that it could sell as many as 10,000 units per month by the fourth quarter. Considering that NIO currently delivers around 20 to 30,000 cars per month across all models, the L90 alone could increase volumes by a third. That's huge. It's not just about one model, it's about shifting NIO's story from being a niche premium player to a company with mass market scale. Thursday's rebound suggests that investors are still buying into this vision. Concerns raised earlier in the week about whether NIO could ramp L90 production smoothly, or whether it might need to raise fresh capital given its lack of profitability, haven't gone away. But they're being weighed against the upside potential of these new products. And for now, the upside story is holding. Third, analyst sentiment continues to lend support. Earlier in the week, Morgan Stanley flagged concerns about production but also emphasized that the ES8's growth potential remains underappreciated. Other firms have recently upgraded their outlooks as well, noting that the combination of premium and mass market models could accelerate NIO's path toward profitability. Those voices don't disappear just because of a one-day pullback. Instead, they provide a backdrop of cautious optimism that helps buyers feel more confident stepping back in on dips. Fourth, the technical picture remains favorable. After Wednesday's drop to $6.34, NIO found buyers quickly around the 6.25 mark. By Thursday, the stock was pushing back towards $6.50 and managing to close above it. That tells us that $6 remains a solid line of defense, while $6.50 is emerging as a short-term pivot. If the stock can hold above $6.50 into the end of the week, it sets up another test of $7 in the sessions ahead. The heavy volume we saw on Tuesday, when the stock surged 10%, wasn't matched today, but Thursday's action still showed conviction in the rebound. The broader market also played a role. US equities were choppy throughout the week, with investors balancing optimism about a potential September rate cut against lingering concerns about inflation and global growth. For high beta names like NIO, these macro swings can amplify volatility, but Thursday's calmer tone in markets helped risk assets stabilize. In that environment, NIO was able to claw back some of its recent losses, even without a direct news catalyst. So, what does all this mean for NIO going forward? The takeaway is that the stock is still in consolidation mode, and that's not a bad thing. After running nearly 40% in a week, NIO needed to prove that it could hold its gains. Wednesday's pullback and Thursday's rebound form part of that process. The fact that the stock is still comfortably above $6, and now back above $6.50, suggests the breakout is intact. Looking ahead, there are a few things investors should watch closely. First, delivery numbers. September's report will be critical for confirming whether NIO is turning product buzz into real sales momentum. Investors will be particularly focused on early ES8 orders and signs of progress with the Onvo L90. Second, any commentary from management on margins and capital needs. The fear of dilution remains a headwind, so clarity on funding plans would help calm nerves. Third, macro events. Economic data, inflation prints, and Fed commentary could all sway sentiment quickly, especially as markets look ahead to the potential September rate cut. For traders, the technical levels are clear. $6 is the line to defend. $6.50 is the current pivot. $7 is the next big test. If NIO can push through 7 with conviction, the rally could have room to extend. For long-term investors, the story remains about execution. Can NIO ramp the Onvo without hiccups? Can it sustain growth in the premium segment with the ES8? And can it chart a credible path toward profitability while maintaining its brand differentiation? Thursday's rebound doesn't answer those questions definitively, but it does suggest that the market is giving NIO the benefit of the doubt, for now. And that's a shift from just a few weeks ago, when sentiment around the company was deeply negative and the stock was struggling to stay above $5. The bottom line is that Thursday's trade was less about a new headline and more about confirmation. Confirmation that NIO's breakout isn't broken. Confirmation that buyers are still willing to defend $6. Confirmation that momentum remains in play as the company prepares for critical product launches. So as we wrap up this Thursday recap, here's the big picture. NIO closed at $6.51, up 17 cents on the day. It wasn't a huge move, but it was a meaningful one. It showed resilience after a sharp pullback. It showed that investors are still engaged. And it set the stage for what could be another run higher if momentum continues. For now, the watchwords are stability and follow-through. If NIO can continue to hold $6.50 into the weekend and make another push towards 7, the narrative of a true breakout gains more strength. If not, we could see more back-and-forth trading as the market waits for fresh catalysts. Either way, Thursday's rebound is a reminder that the story isn't over, it's just entering a new chapter.